Hey, thanks a lot for that, Mitesh. Well, let's go across to Manisha now to get a quick update on what's happening in the world of commodities. Manisha, the equity markets are really under pressure now. Are you seeing the same in the commodity space as well?
Well, most of the sectors, yes, but I want to talk about the energy markets where we have seen a very sharp decline continuing. The crude oil prices have declined to 3-week lows now, and we are looking at pressure continuing for the natural gas prices. Remember, this is one sector which has seen an all-time high in the last year. $10 is where we were trading in the previous year, but currently we're trading below $2.2 per MMBTU as well. So a very sharp cut coming in for this one. On the MCX prices also, we have seen very sharp cuts. It's a 28-month lows right now for the natural gas prices, and the prices have seen 10% of a decline in the previous week, and we have seen prices fall down by 45% in this year until now. You know, last year we were trading at something like 700 rupees per MMBTU in MCX. We're trading at 167 right now. So it has been a very sharp cut coming in for the international markets, and the Indian markets clearly mirroring it at this point in time. The reason that you have seen a decline coming in because it is above normal temperature. We started 2023 with the warmer than usual winters, and that clearly weighs onto the demand side of the factor here. And then you also are looking at the US inventories continuing on the higher side. Whether you look at a 1-year average, 5 years average, or 10 years average, the kind of US inventories that are being held right now are much higher than this time of the period there. So when you look at the US inventories, they are 328 billion cubic feet higher than year-on-year basis and 183 billion cubic feet higher, and a 5-year average as well. The European gas prices also have continued to decline. We're trading at 50 euro megawatt on the lower side here, and this is the lowest since August 2021 that we saw in the prices there. The decline in Europe also is because the inventories are much on the higher side. The Europe storage currently stands at 64% full, which is much higher than a 10-year average of 54% full. So even with the energy crisis and all the concerns that we saw in the previous year, we are looking at higher storages. Europe also has been able to tap power generation from alternate energy sources. So whether it has been wind or nuclear, we have seen support come in from there. The US LNG exports from Freeport also has resumed. So much of the Europe buying will come in from US as well. And Norway, which was also having some outages, that gas also is back into the market. So there is normal supply coming in from there. All of those factors continue to weigh onto the markets. And $2 per MMBTU could break on the lower side is what the street is now looking at.
All right, thanks a lot for that. Well, that's on the commodity space, but very quickly.